Hi all and welcome to our weekly report for the week starting Monday the 22nd of July. We have a quieter week ahead of us which starts with slow economic calendar on Monday and also on Tuesday. Going forward, Eurozone and also US manufacturing and services PMI data releases in addition to the crude oil inventories are the main point of interest on Wednesday. On Thursday, absolutely anybody who has any interest in euro currency crosses and also European equities, in particular DAX index, will pay close attention to ECB rate decision and the press conference. Also look out for US durable goods orders data in the afternoon. The week will finish on Friday with Japanese consumer price index and also US GDP figures. Now let's take a look at few markets. This is the intraday price action, 4-hourly price action chart for euro dollar. The key trading level is at 1 spot 12.50. We had the price action which traded higher, lost this rising support trend line, which is now respected to be as a resistance area, and the recent price action appears to be sideways consolidation. They tend to break to the downside if they're found in clearly defined downtrends, potentially looking for an extension towards further downside supports at 111.60, possibly 111.40, 111, 110.80, 110.65. Alternatively, if we see a rally from here and a breakout, so the key level, as I said, is at 112.50. Breakout above that level could potentially target 1 spot 13. So breakout above that level, retest of that level from above as a newly found support, and the end of day close, in particular end of day price closing above 1 spot 13 would potentially target additional upside resistances towards 113.40, 114, 114.40 to the upside as well. But the prevailing trend is pointing to more downside. Keep an eye on that ECB rate decision and press conference on Thursday. Sterling dollar is downtrending in 4-hourly time frame as indicated by this falling resistance trend line. The recent price action appears to be a breakout above that falling resistance trend line. The price is currently supported by 50 and 20 period moving averages, but also capped by 200. Key trading level is at 125.30. Bears appear to be in control below that level, especially if we see a further move to the downside and the loss of this current support at 124.80. Loss of that level would appear bearish, potentially opening the way for more downside towards 124.50, 40, 124, 123.80. Over a longer period of time, some bears are looking at 123. Alternatively, if this oversold bounce back and the retest of this falling resistance trend line holds support and we see a spike higher, and especially if we see the end of day close above 1 spot 25.30, 1 spot 25.50 high, that would create a short squeeze, potentially targeting this area up here, 126.20, 126.70. Only the end of day close above 126.70 would further support this bullish counter trend reversal, potentially targeting 127.60, 128 to the upside. Dollar Japanese yen also appears to be under pressure. The price action is trading below this previous rising support trend line, and it's retesting it now as a newly found resistance, and we are seeing a move lower. The current price action 4-hourly time frame appears to be an oversold bounce back, and we are coming to some major levels of resistance. Nice and round number 108, 108.20 would particularly be of interest as a key trading level. The reason why I'm keeping an eye on this 108 is twofold. Apart from that being a round number, I can also draw a falling resistance trend line connecting the sequence of lower highs, pointing to the same level. This is also a 50 period moving average, and it's also very close to the cluster of these previous lows. In addition to all of that, I can also draw a fib retracement from the current swing high at 108 108.95, call it 109, all the way down to 107.20. And this is giving me this 50 and 61% fib retracement, very close to that 108, 108.20, 108.30 level. So this zone here is now representing a major resistance on the upside. So basically what I'm trying to say is bears are in complete control below 108, 108.10, potentially targeting more downside to come. 107.40, loss of that level, 107.20, loss of that level, 107, possibly even 106.50 over a longer period of time. Alternatively, a spike higher and run into this resistance area would potentially be seen as a bullish confirmed breakout above 108.30, end of day close above that level, could open the way for the retest of additional upside resistances towards 108.60, 109, 109.40. Gold in 4 hourly appears to be a breakout above this falling resistance trend line. Energy was building. We were talking about this over the past several weeks. You can see the sequence of slightly higher lows and slightly lower highs. Energy was building, energy was building, energy was building, and finally we saw a breakout and a pop higher above 14.25, 14.26, rally into 14.50. And now we are seeing a pullback and the retest of that previous resistance now as a newly found support. Key trading level at 14.20. As long as the price stays above that level and we see a move higher, bulls are in charge, potentially targeting 14.33, 14.46, 14.50, 14.55, 14.65, 14.72 on the upside. Alternatively, if we see a dip lower, the key trading level to the downside as a support is now at 14.10. Loss of 14.10, the end of day close below 14.10 would be seen as bearish, potentially targeting 14 hunting 13.90, 13.80 to the downside. Lastly, let's talk about crude oil. Crude oil is under pressure despite increased in geopolitical uncertainty. We had some news that Iran captured 2 tankers over the past couple of days. This was the news that was initially kind of published probably about a week ago, but only picked up by mainstream media a couple of days ago. We have a shooting of Iranian military drone by US Army vessel, and we also have a huge issue with supply and demand. But crude oil appears to be under pressure based on the concerns over a global economy and a lack of demand going forward, which could be triggered by escalation of US and Chinese trade talks. Anyway, apart from all of that, key trading level for us to watch is really at 55.90. So we saw a small oversold bounce back based on that recent news, but very little movement to the upside in percentage terms and also in a number of points terms. I would be keeping a close eye on this fib as well from the swing low at 51 all the way up to 61. We are currently at 50% fib retracement, so this corrective move lower is coming to a major level of support, and we also have 61.8 fib retracement at 54.70, 54.80. So bulls are hoping for a rally higher and a breakout above this current falling resistance trend line, and also 20 period moving average at 57. Breakouts above 57 could target 58. Breakout above 58 targets 59, 50, 60 on the upside. Alternatively, if we see further selling pressure and the end of day close below 54.70, that would negate this counter trend bullish rebound, potentially targeting deeper downside retracements towards 54, possibly even 53, 52, 30. Thank you for watching. Thank you for listening. Stay safe and happy trading. Bye for now.